Hello and welcome back to Financial Education. My name is always Zach Collins, and today what I thought would be interesting to a lot of finance YouTube viewers is to have a look at what my personal portfolio looks like. Everyone can say do X or do Y, but if they're doing Z, it comes off as though they're trying to sell you something. I'm not here to sell you anything. I don't want you to take anything away from this other than some entertainment value of peering into someone else's investment portfolio and getting an idea of why I am doing what I am. Before we get to that, for those that don't know me, what is my background? I was a financial advisor in my past, fully licensed, fully FISA compliant, specializing in super and non-super investments. I'm not licensed anymore, but I'd love to get my license back one day. I chose to leave the industry as I couldn't stand the owner of the business, and his firm was very heavy in sales. I have no interest in sales. I mean, it's not all sales, but my passion is to help people not to sell various managed funds or insurance products. These days, I work in tax and compliance. With that being said, let's dive in. I've been tracking my net worth for a few years now. I've seen other people do it frequently, like monthly. However, I find there's not a massive amount of fluctuation month to month, and so I'd like to do it semi-annually, which is every 6 months. I actually saw a guy post his net worth on Reddit where he updates it daily. What? That is way too frequently to show any meaningful trend. One day I buy coffee at work, the other I don't, and now that it's part of my portfolio. Like anyway. Updating every 6 months allows me to see the movements in the assets, but without being concerned if there's any fluctuations in the market and falls over the short term. I'll flash up on my screen now the spreadsheet, as you can see that I've split into a few different sections. I do hide some of the columns because they're no longer required. Either it's a debt that no longer exists or it's an asset class I no longer want to hold directly. Either way, I keep it so that the calculations in the spreadsheet can use it, but it's hidden from view and it's not something that keeps cluttering up, every time I open up the spreadsheet. Let's start with the first asset type I have in the spreadsheet, and that's where the vast majority of my wealth is, and that is property. It's currently sitting around the 110K in net assets. That's assets minus liabilities. It's down on July of 2021, where it was over 130K. However, this is a more realistic number than what I had there in the past. Previously, that number was made up of equity in my one bed apartment that I was a sole owner of, plus a 25K deposit on a second unit, which we were waiting to get finished. We bought that off the plan. Currently, I still hold that second apartment. We sold off my one bed to pay for the newer unit. We also own a house, which is what I currently live in, so I film all my videos from. Well, previously the one bed apartment was in my name only. The two current properties are jointly owned, 50% with my wife. So as a couple, we have over 220K net assets, but I keep it, just that to look at my personal wealth, as it's something I have more control over than our joint wealth. When it comes to property, however, they're really hard to value. With stocks and ETFs, you can go look at the market value any day. Whereas with property, unless you sell, you never really know what it's worth. I'm using the refinance value for our apartment and the purchase price of our house, as that's the most recent numbers I can use for both properties. It's probably out of date, but unless I get a new valuation done or refinance or I sell, it's not really worth the hassle to even think about the different numbers. We were able to draw quite a lot of equity from the apartment, and that is the only reason we were able to buy the house in the first place. The refinance value is up about 150K from the purchase price. However, it is costing us a bomb to keep. I actually made a video about the cost of that and the return of that unit, but for some reason the sound didn't record properly, so I didn't end up finishing it. But the synopsis of that is that our net cost on the apartment, in the first year renting it out as an investment, we ended up losing about 30K in deductible expenses. We're almost at the end of our second year of renting the property out, and it's looking better than last year, but we're still looking at 10 to 15K loss. If you've watched my previous videos, you'll know what the difference between deductible and non-deductible is. After tax, we still lost about 20K in the first year, and we're probably looking at 10K net loss in the second. It looks like we'll probably continue around that 10K mark for the foreseeable future. We're lucky that we are decent income owners and that both the properties are lower value, so we only have about $1 million in debt in total. I know people that have that much on just one property, so lucky at this point in time we can afford to hold both, but very few people can afford to lose $20,000 a year after tax, with the only prospect of profit being capital gains at some unknown point in the future. Next up on the spreadsheet, you'll see ASX shares, and it fluctuates a lot. I try to keep as much of my spare fund as cash, due to the properties costing, way too much every year. As I said earlier, the investment property is running quite a decent loss. The house is also causing some financial issues. We had an electrician over a few times, the plumber had to get the fence fixed, and I'm hoping to get back into putting a little more into ETFs over the next couple of years. I'll probably just be some basic ASX 200 ETF or a diversified fund, something simple and market tracking, but I'm not going to take over, it's not going to take over my portfolio and be the main driver of wealth anytime soon. What's not listed on the spreadsheet is some ETF holdings that I have for my son. I invest monthly for his future. It's technically in my name, so you can consider my wealth, so I pay all the tax on it, but I keep it in a separate brokerage account, so it's completely distinct. I've also got a separate spreadsheet for it, to keep it simple. And, one day he'll get all the money in that account. Because it's kept separate, I know exactly what is his and what's mine, even though it's all technically in my name. Now, super is where I do most of my investing these days. I try and salary sacrifice when I can. I'm not sure if I've mentioned it before, but my wife and I have an SMSF. This means I have full control over the investments that we hold through the super. I used to use the self-investment through Host Plus, but they limited the investment options and there was a cap of like 20% in any one specific holding. And also you have to keep some funds in their pre-made investments. I have no idea if that's still the case, but when we moved the SMSF back in 2022, it was such a nice breath of fresh air that I had full control of where my super was being invested. I love it and I cannot foresee ever going back to an industry fund. SMSFs tend to be more expensive than regular super funds. However, when I was with Host Plus, I think I was paying around $200 per year for the self-invest option. And my wife had a financial advisor who was charging $4,000, plus the investment themselves were costing about $1,000. So that's the primary reason we moved the SMSF. I was able to invest our funds better than her advisor, plus we saved on his fees. That meant that overall, it would be cheaper for us having one SMSF account and both being with separate people. That's not the case for everyone, so make sure you look into the pricing before you just jump in blindly. When it comes to SMSF, there's also trustee duties you need to be mindful of, and you need to make sure you're not doing anything that goes against the SIS laws. I'm pretty confident in my knowledge of investing and my knowledge of tax laws, so we should be fine, fingers crossed. But definitely something you need to consider. The penalties for breaking the law can be quite harsh. Finally, the last one is cash. You always need to have some kind of cash buffer. You never know when you need to pay a large expense. As I said earlier, I've had a bunch of unexpected costs come up over the last year or so, and it's good we've been able to find enough to cover it. I would have been really bad if we didn't have that liquidity. With the investment property costing $10,000 to $20,000 per year after tax, having that cash available is also important just in case the tenant moves out. We still need to pay the mortgage and the rates and the strata and all the other fees that come, without any income, which is another thing that needs to be taken into consideration. As you can see, the net is sitting around about the 180, 190K mark. My net worth jumped up early in the first few years, but it's been pretty stagnant since. I'm hoping now to just grind away, pay off the debt, get my super to compound, and maybe one day soon we can get the number up to $1 million. Might take a decade or two, but we'll have to see. Maybe we'll do another video like this, in a couple of years, see how much closer we can get. Hopefully, I've been able to help you better understand what my personal investment portfolio structure looks like, and hopefully you've enjoyed the video from an entertainment perspective, not an advice perspective. If you've got any more questions, please feel free to drop a comment below and I'll answer if I can. Thank you so much for watching, and I'll see you guys in the next one.